You've probably seen this before. Price breaks a key level, you jump in, and before you know it, the market reverses, hits your stop loss. And no, that's not bad luck. That's smart money manipulation. In this video, I'll show you how to spot fake breakouts before they trap you. So you only trade the clean, high probability moves that institutions, the big boys, actually drive. Fake breakouts exist for one reason: liquidity. Retail traders love breakout entries, so what do big players do? They push price just beyond those obvious levels to trigger stop losses and breakout buys. And then what happens? The market reverses. This isn't random. It's actually engineered liquidity hunting. The market moves where liquidity is, not where you think it should. You can plot your support and resistance levels before every trade entry you make. That's fine. That's pretty basic for every trader. But the thing is, are those levels obvious enough for the big players to see them? Are they strong enough? Have they been tested multiple times to pretty much serve as a liquidity zone? If it is, then you're on the right track. But then you need to ask yourself, before I trade these breakouts, who is trapped above this level? Where is the liquidity sitting? Once you start thinking this way, you stop being the liquidity and start trading with it. Here is how you spot a fake out before it's too late. 1. Weak follow-through candles. After a breakout, if you see small-bodied candles or rejection wicks, that's not conviction, that's hesitation. Real breakouts move decisively, not reluctantly. 2. Volume or momentum drop-off. Watch for a sudden fall in volume or momentum indicators like RSI flattening just after a breakout. You love to trade with indicators, I do not. But if you really want to use indicators the right way, this is a scenario in which case you can use your indicators the right way. And you're just using it to know. You're not using it to actually trade off it. We're using it to know what the momentum of this breakout actually looks like. Real breakouts accelerate. Fake ones lose steam quickly. 3. Liquidity sweep before reversal. When price runs just above a major high, taps liquidity, and sharply rejects, that's your classic stop hunt signature. The candle structure usually looks like this. That's your early warning to step back and wait for confirmation. Now, I'll tell you what a real breakout looks like. Clear impulsive movement through structure. A clean retest or consolidation above the broken zone. Continuation candles with strong volume and minimal wicks. Like I've always said, always wait for a retest. A retest isn't delay, it's confirmation. Real breakouts don't run away. They build structure before continuation. Wait for the retest and you automatically filter out 80% of fake outs. Now let me tell you the safest approach to trade breakouts. 1. Identify the liquidity zone where breakout traders are likely to pile in. Now let me ask you, where are those levels going to be? They are your classical support and resistance levels, but the most obvious strong ones. 2. Wait for the sweep and rejection. That tells you the fake out has occurred. 3. Trade the reversal in the opposite direction when structure confirms it. That's how professionals do it, because you're not reacting, you're anticipating. Let me show you some examples on a real chart. For example, this is a CAD JPY 4-hourly chart. Now on this chart, we can see that price initially made a series of reaction around here and then decided subsequently to move to the upside. Now you can see clearly now that price is now rejecting to the downside again to meet this demand level. Now what do we do as traders if we want to trade to the downside, assuming this is a bearish trend? We simply wait for the breakout. Let's see whether this breakout occurs. Now we can see that we've gotten one breakout here, but if you look closely at this candle, you will see that there was a first rejection right about there, which is this one. This was the first rejection. As a matter of fact, that first rejection you saw there should have made you to pause as a trader so that you don't trade a fake out. Now this other candle has now come, which is the next red candle. The next red candle came along and decided to break through quite convincingly. But do you trade breakouts that way? No. Like what did I tell you initially? You need to wait for the retest. So imagine in this case you traded a breakout based on this, and watch what will happen. You can see that you would have lost out on that trade. This is another breakout scenario on Bitcoin. So initially, Bitcoin had two previous rejections right about here. And because of these rejections, which you can see clearly mapped out here, that's why we have this beige colored, or actually this yellow colored zone existing. That's a potential liquidity zone or your resistance level. Now we are waiting as traders to trade a breakout of this, and that happened right about here. You can see that a breakout happened, but this is where your intuition comes as a trader, as a forex trader, a professional forex trader. Is this breakout legit? How do you know whether this breakout is legit or not? I told you that a breakout, there'll have to be less wicks. So in this case, it's actually quite a full candle break, which is the green candle which you see there. So I'm just going to zoom in nicely. So it's quite a full break, but obviously you don't trade just on the break. You wait for a test. Now you can see now that we had only two candles above this zone, and all of a sudden, what happened here? What's this candle, guys? This candle is a bearish engulfing candle. Now a bearish engulfing candle happening back after a breakout, that should throw you warning signs that this might not actually be a legit breakout. I told you that breakout candles most likely will have momentum candles to the side of the breakout. Now in this case, why are we just having two candles and all of a sudden a bearish engulfing candle? So that's how you exercise patience in this type of trade so that you don't enter into a fake out. Most likely this can be a fake out. Now let's see whether it was actually a fake out. Now you can see clearly that this trade was actually a fake out. So if you try to take a trade of this zone, you would have clearly been stopped out of this trade. Now I'll use one more chart example to buttress this further. This is a chart on Euro NZD. Now initially we can see that price had two rejections right about here. So this is the first rejection right of this level, and then this is the next rejection still on the same level. So what do? We mark here as a potential liquidity zone, and we use our classical rectangular bar to map it out just like this. We'll map it up nicely and allow it to run all the way. Now, all we are waiting for as traders is for a breakout above this zone. Now, what do? We'll wait for the breakout. Now, you can see clearly currently in the market, there seems to be some form of reaction off that level. No breakout has occurred yet, so you keep waiting. Now, we've seen a breakout has occurred. Now, we don't trade the breakouts. We actually wait for a retest. But looking at this candle, it's quite convincing. It looks like a convincing bullish candle break of this zone, but obviously we don't trade the breakouts. I am reiterating it so that you can understand that you do not trade on breakouts. You wait for a test. Now let's see whether it's a legit breakout. Are we going to have momentum candles? Are we going to have wicks subsequently? Is the retest going to be legit as well? So let's look at it. So you can see that right off the bat we are not having good momentum candles, so that's a telltale sign of a likely fake out. And what next do we see? A straight up bearish engulfing candle break back into the zone. You can understand how these things work, so you know exactly what to watch out for whenever you're trading breakouts. The first thing you need to know is do not trade on the breaks. The second thing you need to know is validate the break. Does it have a lot of rejection wicks? It's the momentum to be questioned. In this case, we are not having a lot of momentum candles after the break. And on the retest, are we having the opposite signals on the retest? If you've ever been caught in a fake out, you now know why, and most importantly, how to avoid it. Inside my price action quick start program, I go even deeper into spotting smart money traps, structure reversals, and high probability setups you can trust. The link is below if you're serious about mastering clean chart trading. And if you want to know more about market structure reversals, I delve deep into it in this video right about here. Go and watch it right there.